It's always tough following Deb, but thank you, really teed me up for this part of the day. My name's Tim Baker. As Neil mentioned, I'm responsible for coordinating some of the innovation activities at Thomson Reuters and in the financial risk division. What that really means is I help the organization connect the dots internally, innovating on the incredible content and talent that we have across the organization, and increasingly leveraging new and emerging technology that we develop both within the firm and is developed outside the firm through our partners. So me and my team have our fingers in lots of other people's pies and in a few pies that we're baking ourselves. The thesis here is that the very same technology innovation that is enabling disruption in financial services are the same technologies that the large incumbent firms need to embrace and adopt in order to respond to that innovation. So I think we all know that technology is enabling and driving much of this disruption across financial services, lowering the entry barriers to new entrants. The fintechs, as we've heard, have access to instant on and instant off computing power in the cloud, as well as access to artificial intelligence tools, NLP solutions, delivered by firms like Google and Amazon and Microsoft. As customer demographics shift, the millennials expect more and are also willing to adopt new ways of investing, as we've heard already. Regulation is chewing up significant amounts of capital, for the sell side especially, but this is also having a knock-on impact on the buy side as unbundling takes hold and asset managers need to be much more self-supporting. The bottom line is, this is driving changes to the business model, with passives taking share from actives, and a gradual shrinkage in public markets as companies have delayed IPOing or have bought back shares. This is really creating an incredible dynamic in the marketplace. I borrowed this slide from BlackRock's 2015 Investor Day, and it really tells a telling story. While they expected that the asset management industry was going to continue to grow, the active management was expected to show no growth at all, with all the growth coming from smart data, ETF, robo-advice. In fact, a couple of months after this came out, BlackRock invested in a robo-advisor, and as you'll see, they made a pretty good bet. This shows that the assets gathered by robo-advisors, I think towards the beginning of this year, reached $1 billion. Now, $1 billion in the scheme of things isn't a big number, but just look at the shape of that curve. And investors have been voting with their feet as well, as we know. It's not just the convenience of the ETFs and robo-advisors that's driving fund flow, but it's also the relative underperformance of active management in aggregate. The right-hand chart comes from our Thomson Reuters Lipper team and shows how in 2016 there was a significant shift towards flows into index funds. That's the blue bar there. Now the good news is, as this slide shows, again from the Lipper team, the best active funds are still materially outperforming. Now, you might expect this because obviously we're cherry-picking the best alpha generators against the average. But the question is, how do you pick the right managers year in, year out? We'll probably start with the firms that are doing the best at managing their data and extracting alpha from that data, since many of the top funds are now the large quant and data-driven hedge funds. The industry is shifting as well and reacting to this new normal. For example, there's a new breed of analysts in some buy-side firms. They're called data hunters. Their mission is to find new sources, I feel like Star Trek here, new sources of uncorrelated data and primary sources of data, like the sensors that increasingly are being dotted around our homes, from cell towers that track our movement in and out of stores, from our activity on the internet. Why wait until those government statistics on PMI come out when you can literally count the number of cars going in and out of car parks, the number of trucks leaving factories, the number of ships on the oceans, and also the number of planes taking off and landing. Use of such data is helping quant hedge funds and data-driven asset managers deliver some of their best performance in years. Firms are having to retrain staff and to retool their research process. It's no longer just about reading analyst reports, as I used to do, and build models and talk to management. The quant overlay is becoming an essential addition, if not the initial step in the investment process. And advanced analytics and factor models like the Thomson Reuters StarMine models are becoming even more important to fundamentally driven investors. And we call this breed of investors the quantamentalists. Interestingly, the CFA program has now started to add a lot of those skills in data gathering and robo-advisory into their curriculum. I'll talk a bit more about the next word on the slide here, graph fanatics, as I call them. This is a newer trend where people and algorithms are using graph databases to assimilate and understand how events and entities are intrinsically linked together in the global economy. Firms are also increasingly using machine learning and other big data solutions to help their professionals sift through huge amounts of data, much of it unstructured. And the back office is also poised for change as well, as the adoption of more advanced databases sitting at the center of an asset management firm, the investment book of records, is being modernized and moving to the cloud. And all of the risk analytics that sit on the IBOR is also being done in the cloud. My old firm just moved all of their risk analytics into the cloud. Quite a remarkable step for a large Swiss bank like UBS. So let's talk about what we're doing. We've established essentially a framework which covers 6 major key technology trends affecting our industry. And we've classified these trends, as I say, into 6 buckets. Some technologies we see as being disruptive, others generally beneficial to the whole ecosystem, and our customers are working with us actively to help to explore how these technologies can change and improve their businesses. Deb mentioned the enterprise data platform. This will see the release of a new breed of APIs where for the first time we'll bring together in a simple to use and accessible API all of the content assets of Thomson Reuters. We're very active in the data space, as you'll see in a moment, especially around this notion of a graph database. We're aggressively adopting cloud technologies as we seek to leverage cloud to accelerate our own development, but also to deliver data into the cloud in anticipation of our customers moving there. Meanwhile, our customers themselves love the speed with which they can build their own applications. In our case, we're looking to move our quant database, QAD, into the cloud. This will significantly speed new users of QAD and allow them to get to alpha faster. I didn't mean to go forwards there. In blockchain, we're very active. We're members of R3, a large bank and asset manager consortium, as well as Hyperledger. And we're looking to shortly enable our content to interact with all of the different blockchain fabrics that are emerging across the industry. We're also investors in a couple of very promising blockchain startups. On cognitive, we've established a cognitive center with about 100 engineers and data scientists. Their mandate is look to leverage machine learning and other new technologies, both in our own content factory, as well as helping our customers as well. And finally, the Internet of Things. That's where a lot of this new content is coming from, and that's where our platform increasingly is becoming fit for purpose to ingest that new content and deliver it out to customers. The other angle we're following quite closely is, as we've heard, the fintechs. There's billions of dollars going into fintechs, and the chart on the left shows that VC investing in fintechs in the third quarter last year was close to $2.5 billion. And actually, as you can see on the right-hand side of the chart, Asia is becoming one of the most active investors in fintechs. We're increasingly engaging with that fintech community. We're providing data and access to our fintech partners, and we're working with incubators as well. I think we've mentioned that downstairs we've got QA Point. And what's interesting is our partnership with the FinTech Sandbox in Boston led us to partner up with a company called Elsin. Elsin built a powerful screening and backtesting tool that sits on top of the QAD data, but doesn't require anyone to cut any code in order to get value out of that database. I encourage everyone to see the demo. We don't just look at the world in terms of fintechs, but we also look at the world in terms of big techs. Remember that $2.5 billion investment in the third quarter? We'll look at how much money that firms like Amazon, Microsoft, IBM, and Google are investing in R&D. Probably close to $40 or $50 billion a year is going to R&D, and many of these firms are focusing that on financial services. So let's talk a little bit more specifically about what we're doing. We are clearly one of the biggest fintechs ourselves, and we find ourselves uniquely positioned to marry technology, subject matter expertise, and data. I didn't know the statistic about DataStream being 50 years old. We've been curating data for an incredibly long period. Our deals database is 30 years old, 30 years of deal data. So what are we doing? We're bringing together all of that data underneath our umbrella solutions program called Big Open Link Data. BOLD is a TR initiative aimed at opening the firm's data model. It's also about delivering many of the tools that we've developed over the years to manage that data. Underpinning all of this is what we call Open Perm ID. Perm ID is a unique identifier assigned to a wide variety of information objects, like organizations, like their subsidiaries, like the securities that they issue. All of the people that who have sat on the boards of those companies, all of the events, are all tracked uniquely and assigned via Perm IDs. We've opened up the Perm ID in April 2015. We launched permid.org. I encourage you all to go to permid.org, look up your company. You'll find your company's address, some reference data. If you're a public company, you'll find the securities listed. You'll also find a list of the officers and directors of the company. You'll find the LEI, the legal entity identifier, on there. That's all open data that we've made available to customers, competitors, and partners. But the stack on which Perm ID rests is much more exciting than that. Thomson Reuters Intelligent Tagging is the core natural language processing engine used by Thomson Reuters to tag and index unstructured data across a wide variety of document types, including filings, broker research, and news. It leverages the Perm ID, as well as ongoing and near real-time maintenance of the universe of Perm IDs. That means that that reference data, that metadata that's used to tag the unstructured content, is bang up to date. Intelligent tagging is now being used by our customers, both off-premises, in the cloud, and on-premise. So those customers are taking advantage of the 3,000 content specialists maintaining the accuracy and the speed of that data model. That means that for the first time, customers like Wellington can actually find their own internal research within their own internal portal. Another facet or byproduct of all of this data management is what we call a graph database. Our internal graph database has captured over 100 billion relationships, coincidentally, the number of neurons in the human brain. Facebook, Google, Microsoft, they all have graphs at the center of their businesses. The reason why Facebook is connecting you to people that you'd forgotten about or friends of friends is through their graph and network of connections. Our graph offering, just recently launched for early access to customers, is in two parts. We have a solution called Data Fusion, which is an advanced graph and data management platform. It integrates our core graph with customers' structured and unstructured data. The knowledge graph feed is, if you like, the starter kit for Data Fusion. It covers about 5 billion relationships across those entities and people and events that we've been tracking, and links those entities across more than 100 different types of relationships. Graphs are very powerful, but also need access to powerful computing power. And hence, our graph analytics platform is typically deployed into the cloud. But the great thing is, instead of having to build it from scratch, which might take a customer 6, 12, or maybe 18 months, we can instantiate the whole system in about 20 or 30 minutes. That's the power of the cloud in combination with big data. Now, this is quite a small graph, and as you can see, it's quite hard to really see the most important relationships between, in this case, two entities. So last year, we commissioned our Thomson Reuters team in the labs in Boston to try to help to improve how we can navigate and connect data points across the graph. And there was born Data Fusion Analytics, which is now a patent-pending methodology that allows customers to apply their own weighting to all different types of relationships represented in the graph. This allows the analytics to be fine-tuned for different use cases, either for alpha capture or perhaps for risk analytics, for example. Here we started by using intelligent tagging to extract key entity data from a news report, so streaming news coming into the system. In this case, a report about Dell, where perhaps we might want to understand how that piece of news relates to a holding of ours, VMware. The algorithm weights different types of relationships, which influences which paths are exposed. This is not always the shortest path, but importantly, the most relevant path. Change the weights, and different paths will appear. Once the path is identified, Data Fusion, the application, can turn that path back into natural language. That's the blue text, which I'm sure you can't read. But we could also turn that back into a score, which could feed an algorithm, help systems to actually look out for risky events across large portfolios of assets. Now, I deliberately put together an example more close to home. This is actually a document about a supply chain deal with a company called MTR here in Hong Kong. And intelligent tagging mined that data, it extracted a relevant snippet, and it also added confidence levels about the nature of the supply chain relationship. Data Fusion then ingests that, plus in this case about 250,000 other supply chain relationships, and pulls that into the graph. And so now you can see the core entity at the center and all of its suppliers, and then we can fine-tune on the left-hand side which relationships we're most interested in, and we can also adjust the scaling to sensitize the graph for how strong those relationships are. So hopefully that gave you a sense for some of the big data analytics that we're developing in the firm and increasingly making available to our customers. So to wrap up, Bold Solutions demonstrates that what's really special about Thomson Reuters as a content and fintech firm. We have our 3,000 content specialists who are curating the core data and have been doing apparently for over 50 years, or almost 50 years. The precision of the Perm ID has allowed us to precisely map that data together. And we've trained our natural language processing systems, intelligent tagging, to leverage the precision of the data model. Data Fusion is now available to customers and can be installed in minutes and pre-populated with a huge, probably one of the biggest graph databases in existence. That allows customers to very quickly move from data to insight. And that's really how the answer company, or Thomson Reuters, is helping you guys come up with the answers to some of the hardest questions. Neil, I think we might have time for questions. I'm not sure.
Thank you very much, Tim. We do have a question. What are you seeing with capabilities such as IBM Watson, and who in the innovation and tech space really excites you with respect to the buy side?
So we're working with IBM Watson. I think probably many of you in the room, it's incredible. IBM and the marketing machine of IBM has done an incredible job of educating boards of companies around the world. We have a large cognitive center ourselves, and we've got a number of proof of concepts ongoing with Watson. And we're certainly seeing a lot of use cases across the banks and the buy side. I think the challenge that many of those customers face is that Watson and many similar solutions start as an empty vessel, and they have to be kind of pre-trained. They have to be loaded with huge amounts of content, and human beings need to go through that machine learning process. And I think actually a lot of our content and the graph can help accelerate that process and get to a solution faster. So we're exploring a number of ways of how we can work with those companies. I think as far as customers are concerned, I think there's incredible work being done by our biggest customers. And, the notion of labs and data science has really taken off. We're seeing a lot of customers staffing up their data science teams, firms like Wellington and State Street. I think on the buy side, a lot of the banks, UBS, Credit Suisse, large data science teams. And of course, they've got huge amounts of unstructured data and structured data. And increasingly, our labs, I think we've just opened our lab in Singapore. The footprint, is increasingly being matched against those customers. So we've got our data scientists working with our customers' data scientists, with our content, with their content. And these tools, some of these tools I've been talking about, are really helping those customers get to an answer faster.
Okay. One more final question, Tim. What we're seeing in terms of major challenges with data science relates to the integration between different technology stacks. How does Thomson Reuters view how these things come together?
Well, my personal view is all about interoperability. I think gone are the days of building, a large, new, shiny, kind of golden copy of everything. I think, we've all sponsored or worked on those big projects, and 3 years later, we've gone, we haven't finished the job. Our data model, which was invented by some very smart people, over the years, is a very federated data model. So all of those 300-400 kind of databases of record, as we call them, are exactly where they were when we acquired those assets. But what we've done is we've applied the perm ID to them and linked them all together. And I think that's a clue as to how some of our biggest customers, we've got customers who have got tens of thousands of databases. Now our open perm ID and our data model is increasingly helping our customers stitch together those data assets, so they don't have to manage their own symbology. They don't have to come up with a database of entities. Our KYC utility increasingly is universal to all of the counterparties that exist in financial services. So that utility in combination with perm ID is helping our customers connect their data together.